Remember that the tax law is a series of incentives. These aren't loopholes, they're incentives. They're incentives to invest a certain way, the way the government wants you to invest. Well, you can't wait until November and December to find a deal to invest in. You have to start looking now. You have to start planning now. You have to, if your tax advisor isn't giving you good tax advice, you need to find the tax advisor now, because November, December, it's going to be too late.
Hello, Robert Kiyosaki, Rich Dad Radio Show, broadcasting from beautiful Phoenix, Arizona, where it's either heaven or hell. And right now, it's heaven. That's the reason people come to Arizona. Then it turns to hell for about 3 months, and everybody leaves town. And we have a very important show with you. My guest today is Tom Wheelwright. He's been with me for 20-something years now. Tom is a CPA, but more than that, he's the author of this book here, Tax-Free Wealth. And the reason we have Tom on at this time here is simply because it's tax time. And for those of you who are Americans and your tax season is over, I hope you enjoyed paying taxes. But Tom is the expert on how you pay no taxes or minimize your taxes legally. And I do mean legally. But tax is a very, very, very big subject. So please get his book, Tax-Free Wealth. Even if Tom is not your CPA or your accountant, read this book and you'll have the proper questions to ask your tax advisor. Ask your tax advisor the appropriate questions. If they tell you to pay more taxes, I think you'd better start looking for a new tax advisor so they can advise you how to pay less taxes legally. So, Tom, welcome to the Rich Dad Show.
Thanks, Robert. It's always good to be on the Rich Dad Show talking about taxes, my favorite subject.
Yeah. And then we'll bring this up. This was book number 2 of Rich Dad. It was called The Cash Flow Quadrant. And it fits right in perfectly to what my rich dad was telling me was my best friend's father and what Tom is saying. So let's go. So, most people say, go to school and get a job and you become an employee. So Tom, this is worldwide. Approximately what percent in taxes do employees pay?
Yeah. If you make good salary worldwide, you're going to pay 40 to 45%, 40% in tax.
Okay, 40%. And then if you say, oh my goodness gracious, this was the wrong way, but anyway, going this way. I don't know who drew this thing, but anyway, let's I'm going to quit my job. I'm going to start my own business. So you move into self-employed, or you become a doctor, a lawyer, or an accountant, something like this. How much do this, the biggest mistake is employees who quit their jobs to start the business. What tax bracket do they go into?
Yeah, now they go into about a 60% tax bracket.
60%. So congratulations, you started your own business, and now the government taxes you harder. And then B stands for big business, and according to the IRS codes, Internal Revenue Service Code, this is approximately 500 employees. So that's Elon Musk, Donald Trump, Jeff Bezos and those guys. So how much does a big business entrepreneur pay?
About 20%.
About 20%. And I stands for insider. It's not inside investor. See, these people invest from the outside. They invest in stocks, bonds, mutual funds, ETFs. The stuff that Tony Robbins recommends. I think it's funny. But my rich dad said, come here and be an insider in a deal. And so we don't play with those stocks, bonds, mutual funds on the outside. What does an insider pay?
They can pay as little as zero.
Zero.
Yep.
So you go, okay, ladies and gentlemen, it's tax season. This is the book here. It's called Tax-Free Wealth. And if you want to find out how you can get out of this death trap up here and get down to here, this is the book. It's Tax-Free Wealth by Tom Wheelwright, my personal advisor. And we're always battling this, right, Tom? It never ends.
It never ends. The thing is that, that you can see who the tax law is written for. It's written for the big business owners and the inside investors. That's who it's written for. So that's the key.
Yeah, I call them, we're the capitalists. Yep. We're the people that hire people and we use money to get rich. These people are the people that are hired.
That's right.
They work, guys here, right?
That's right.
The biggest mistake, people tell their kids, oh, go to school, get a high-paying job. Or my mother tried to get me to become a doctor. I said, Mom, there's one problem with that. You have to be smart. She goes, that's right. Don't do that. So this was my rich dad's advice, was down here, learn to be an entrepreneur and learn how to invest. So one of the first things I had to do was take a course on real estate. I took sales from when I was getting out of the Marine Corps in 74. I took sales from Xerox because you have to learn how to sell. And then I took real estate to be an inside investor. Your comments on that, Tom?
Yeah, like I said, I mean, that's how the tax law is written. And the reason is because it's doing what the government wants you to do, right? It's just, I mean, I think that's a really good point, that the people in the E and the S quadrant, they're working for money. The people in the B and the I quadrant are working for assets. They're actually hiring employees. They're hiring people. They're building real estate. They're developing energy. They're growing crops. I mean, that's who those people are. And the government says, hey, we'll incentivize you to do that because we realize that you're taking some risk there, and we're happy to help offset that risk with lower taxes.
So these are not loopholes. These are incentives. The government's saying, look, if you hire people, we'll give you a better tax break. But if you become an employee who's hired, they tax these guys here. Is that correct?
That's exactly right.
And then they want us to use money or capital to provide more jobs for these guys up here.
That's right. It's either other people's time and talents, which is the B quadrant, or other people's capital, which is the I quadrant. Yep.
Right. So there's one more aspect I want to talk about is Trump's tariffs are coming in now.
Yep.
And tariffs are a tax, aren't they?
They are. That's exactly what they are. They're not. Some people think they're inflation, but they're not. They increase the price, but the increased price, just like if you added another sales tax, would increase the price. So it's another tax.
So can I go back in history now? Because as a lot of people say, history proves we don't learn from history. So, like Donald Trump, ironically, pays no taxes. When he was running against Hillary Clinton, she says, oh, and Donald Trump pays no taxes. And Trump looked at her straight in the eye and said, that means I'm smart. Because when you look at that comment there, this is Hillary here. She's an attorney. So naturally she'd be pissed. And this is Trump here. He's a real estate guy, zero, and he's a big business owner. And he comments on Hillary plus Hillary versus the Donald.
No, absolutely. And we've seen it. We've seen it throughout history. We saw it with Mitt Romney versus Barack Obama, Donald Trump versus Hillary Clinton, Donald Trump versus Harris. Right? She's also an attorney. And so what you see is that the people who are paying high taxes are upset because the tax law is written for the people who actually raise the capital and employ the people.
So Obama and Kamala are attorneys?
Obama, I don't think is an attorney, but Hillary Clinton was an attorney, and Kamala is an attorney for sure. Yep.
Jesus. So this is the other thing I want to say is that I went to military school, and we had to study Karl Marx, the Communist Manifesto. And Karl Marx said this: a graduated income tax is essential for the spread of communism. I'll say it again. A graduated income tax is essential for the spread of communism. The reason I bring this up now with Tom here is simply because so many people say, oh, you don't pay taxes. How un-American. I said, no, paying taxes is communism. And they don't get that, do they?
No. I think, like you say, they forget their history. That the Revolutionary War was started over taxes, and a lot of things happen. Taxes have a big impact on our life every single day.
Right. And what Tom brought up here was that America was founded as a tax revolt.
That's right.
It was called the Boston Party. And it was a tariff revolt. America did not want to pay taxes on English tea anymore. So that was 1773, and that led to Revolutionary War. So this is the lesson. First, there's currency wars. Second, there's trade wars. Third, there's shooting wars. So right now, we're about to go into a shooting war with China over taxes, plus Taiwan, plus we have the Middle East, plus you have Russia and Ukraine. So there's a direct correlation between taxes and warfare. Take it away, Tom.
No, there's no question. I mean, throughout history, why do people go to war? If you look at World War II, Germany they'd put so many taxes on Germany. The world had put so much tax burden on Germany that they thought their only way out was fascism. Hitler.
Right. And Adolf Hitler came to power 1933, but who else came to power was FDR,
right.
Franklin Delano, another tax guy.
Well, certainly historically, the Democrats have been more socialist leaning than the Republicans. I mean, that is a difference in the platform. The Republicans have been very capitalistic, and the Democrats have been much more socialistic. So that would be a natural tendency, I would think, between the two. And historically, the Republicans have lowered taxes, and the Democrats have raised taxes.
Yeah, it's really quite interesting. It's tax season. The time to do tax planning is now, right. Not April 1st. Any comments before we go to a break on how people can be better tax planners?
Yeah, I think you said it earlier that remember that the tax law is a series of incentives. These aren't loopholes, they're incentives. They're incentives to invest a certain way, the way the government wants you to invest. Well, you can't wait until November and December to find a deal to invest in. You have to start looking now. You have to start planning now. You have to, if your tax advisor isn't giving you good tax advice, you need to find the tax advisor now because November, December, it's going to be too late.
This is the book, Tax Free Wealth. Read this book, not to become a tax advisor, but you can ask better questions of your tax advisor. And does this work worldwide, Tom?
It does. The principles in tax-free wealth are similar all over the world. Even the tax rates are similar all over the world.
Right. They're very, very interesting. And always remember, America started as a tax revolt, the Boston Tea Party. We don't want to pay taxes. But for some reason, because of our academic system, most teachers are Marxists, because they also believe in labor unions. You know, another thing that Marx said was workers of the world unite. And my poor dad was very much into the teachers union. And my rich dad hated unions. You know, I mean, so there's always three sides to a coin, heads, tails, and the edge of it. And your job is to look at it, which way do you want to go? So when we come back, we'll be talking to Tom more about what a person can do, because it's not a matter of cheating the government. It's actually changing your mindset to here if you can do that. And there's things you can start this progress. So when we come back, we'll be talking to Tom Wheelwright, author of Tax Free Wealth. And we're going into what you can do to actually become more of a capitalist, not a Marxist. We'll be right back.
Rich Dad likes gold. Rich Dad likes Bitcoin. Rich Dad owns both. But right now, Rich Dad believes silver might be the most overlooked opportunity of them all. Here's why. Demand for silver is exploding, used in solar panels, electric vehicles, computers, electric product, weapon systems, medicine, and even water purification. But unlike Bitcoin or gold, silver supply is going down. And best of all, it's still the cheapest. Gold is breaking all-time highs. Bitcoin hitting new records. Silver is still 60% below its all-time high. Why? Silver is useful, and the price has been suppressed for decades to keep it affordable for industry. But Rich Dad believes that manipulation is over. And Rich Dad believes silver's about to slingshot to all-time highs, possibly $70 an ounce in 2025. So if you want to understand what's happening, how to take advantage of it, text the word silver to 24999 and get your free 2025 silver forecast guide from Rich Dad's trusted silver source, Priority Gold. You'll learn what's driving silver and how to buy it smart before the next surge. Again, text silver to 24999 right now to claim your free 2025 silver forecast guide and get ahead before silver takes off.
Welcome back. Our guest today at Rich Dad Radio Show is a longtime friend and a personal tax advisor. For full disclosure, is Tom Wheelwright. He is the author of this book here, Tax-Free Wealth. Just because the pain of being, bending over and, having the tax take your money away from you hurts. It hurts no matter what you say. And my problem is I keep making more and more money, so I've got to keep calling Tom as what can I do? Because again, this is employee, small business or self-employed, doctors or lawyers, big business or investor. So when I call Tom, I'm already in here. My job is how do I stay here stronger? So Tom, what advice do you have for people who are in these categories? What can they do? Let's say you're an S paying the highest taxes. Is there something you can do?
Yeah, there actually are a couple of things you can do. First of all, just because you're small doesn't mean you can't act like the big guys. So you can actually if you have the right tax advisor, you can actually behave like the big guys and get the same tax result as the big guys. You don't have to pay 60%. That's actually a choice. And I think it's a choice of ignorance, because once you learn how, you can go from S to B from a tax standpoint pretty easily. And then on the I side, this is a matter of going from S to I is really the more money you make, the more assets you need to buy. That's what it comes down to. The more money you make, the more assets you need to buy.
That's what's really interesting about Tom, is because I make so much money in this category anyway. I have got to keep buying. And I generally buy oil, real estate, and cattle, livestock. So there are different categories. Even if you're up here, you can stay up here, but act more diligently down here. Any comments on that?
Yeah, for sure. You may make your money as an employee or self-employed person, and that's fine. But when you invest your money, invest it like a big business owner, invest it like an inside investor, and then you're doing what the government wants you to do with your money, and actually you'll actually end up with more assets. It's interesting. I find that by investing the way the government wants you actually make more money on your investments, not just pay less tax.
Yeah. So what I do is I just keep focusing here now. I'm at the later stage of my life. So what I have to do is I have to buy more real estate.
That's right.
But not my house. I buy rental properties from Kenny McElroy. So I get depreciation, But this other thing is, people invest in oil. I was an oil man. I went to Kings Point to drive oil tankers for Standard Oil. And people invest in oil stock. That's not the same as investing in oil like with Mike Maselli. Mike Maselli is my oil guy. I invest directly in the oil well. What's the difference there, Tom, between stocks and investing in oil wells?
Well, you think about it. What does the government want? They want you to actually drill more oil. They want you to produce more cattle. They want you to build more real estate. And so they want you to invest in the actual hard asset. They don't want you to invest in a derivative, which would be the stock. They want you to invest in the asset itself.
Yeah. So when I meet these financial planners who say, well, invest in the S&P 500, I just go, loser, I wouldn't do that. Now, you might have to. It's better than not doing anything. But I don't want to be a loser and invest in the S&P or the Nifty. What's the Nifty? There was a Nifty Thrifty, and then now is the Big Eight, right? The Apple, Microsoft, and all that. So I just don't touch those stocks. Any comments on that?
Well, so interestingly enough, as important as the stock market is in the economy, it's not, from a tax standpoint, it's the hardest way to reduce your taxes. I mean, about all you can do. You can do a 401k or IRA and you get a little bit of deduction here and there, but you're not investing in the actual asset. So the government's saying, look, it's okay if you save for retirement. We're happy to help you with that. But if you're going to do more than that, if you really want to be a serious investor, we need you investing in the I quadrant, because that's where we need the production. That's actually production.
Correct. And then right now with these tariffs that Trump's putting on there, that's causing havoc all over the place right now, isn't it? Because it's a tax.
It is, and it's a consumption tax. So it's very different from an income tax, because it's actually it's like putting a weight on the economy. It drags on the economy because you're adding a tax every time you buy something, and it really does slow things down, and that's what's causing the havoc.
So as a professional, accountant and all this, when you see Trump adding a tariff, what goes through your head? What does a person do to not get nailed by this tariff? Or what is anything a person can do?
Well, what goes through my head is, well, you're going to need to make more money. And so you better be investing better be following what you're talking about, Robert, from an investing standpoint, and you better be paying less tax so that you have more money to invest, and so that you can afford the tariffs. Because the tariffs, if they're all over the place, then you're going to be paying the tariffs no matter what.
And the tariff's going to increase your expenses, right? I mean, so if you're buying like toothpaste from someplace or hairdressing and all this, it all goes up. So that's why you have to make more money, but make it in the right quadrant over here.
Well, on top of that, remember, the tariffs don't apply to anything to what's made in the U.S. So that is an encouragement. If you're going to drill oil in the U.S. If you're going to build real estate in the U.S. If you're going to raise cattle, raise them in the U.S. No tariffs on those.
Yeah. And the thing I like about oil, what kind of tax advantages do I get for investing with Mike Maselli, who's my oil guy?
So oil actually has the best tax advantages of anything, because you don't have to be a professional investor to get the tax advantages of oil. You do as a real estate investor, or if you're in agriculture. But if you're in oil, you can be even an employee, and you can still get effectively, you're getting an 80% deduction typically the first year for the investment. So if you put in $10,000, you get an $8,000 deduction.
And that's why Trump is saying, drill, baby, drill.
That's right. Because, the whole world, we run on energy, right? The whole economy runs on energy. So the more energy we have, the more production we have.
So Tom, we're talking about how you're going to start your own franchise now. I mean, Tom is an S, but he's acting like here, because he runs a business as an accounting firm with employees working for him. So do you want to talk about, or was it too premature to talk about?
No, we actually started the franchise. We have 11 franchisees already. These are tax advisors, and the goal is, I like the idea of having entrepreneurs serving entrepreneurs instead of having employees serving entrepreneurs. The problem with the big firms is you're going to sit down with an employee, but an employee is not going to understand what you do as an entrepreneur. So if you're an entrepreneur, you really want to be with another entrepreneur. And that's where the franchise makes sense, because the franchisees, they're all entrepreneurs in their own right, but they follow our system. I train them. And so they get all the skill set that I would give them if they were in my firm, but they get to be their own firm.
Right. So Tom is taking, the A students like Tom and moving them down here.
Exactly right.
Yeah. So so your target is really a CPA, right?
Yes, it is.
So how would a CPA who's interested in, being part of your network there, which a franchise is a network, Metcalfe's Law, how would they get in touch?
Yeah, so our website is TFW, as in Tax Free Wealth Advisors, tfwadvisors.us. It's the US franchise. And connect with us right there. You can see our other franchisees there. You can see the type of people that we're attracting. And where we have new franchisees joining every single month. So it's starting to get some momentum, which is really fun to see. And the franchisees, I've got to tell you, Robert, I don't like CPAs as a general rule. I don't like hanging around them. but I love hanging around I love the franchisees. They're so entrepreneurial. It's awesome.
They're not the most exciting people, Tom, right?
They are just not, as a general rule.
So, I mean, at least entrepreneurs are wild men. Most of them are a little bit crazy. So you need a good tax advice. So would you give your website again?
Yeah.
How a CPA could get in touch with you?
Sure. It's TFW Advisors, TFW as in tax-free wealth, TFW, TFW like tax-free wealth, advisors.us. And we also have a tax strategy conference coming up in July in Park City, Utah. You're speaking at, Robert. So July 16th through the 18th. So Robert's going to lead it off for us, and we're going to talk about take a business all the way from the beginning of the business all the way through exit of the business from a tax standpoint for all you tax nerds out there.
Yeah, and remember, like when my mom says, "Why don't you become a doctor or an attorney or an accountant?" I said, "Mom, you have to be smart." She goes, "You're right. You best not become one." So I moved down here right away because this is where the wild guys operate, But the wilder you are, the more you need Tom's help because you don't want to go to jail and dance to hula, for some guy. You know what I mean? So do it legally. That's the most important part. Do it legally.
Exactly. Yeah. So I just thought it'd be great to have you there because, I mean, typically you go to these boring tax conferences and you got all these tax nerds out there, these lawyers, they're so boring. Robert, one thing I know about you is you are never boring.
No, I hate, that's why I had trouble in school. Once again, the book is called Tax-Free Wealth. And let me remind you of this. America was founded as a tax-free nation. It was called the Boston Tea Party. But remember this also is that when you add tariffs and things like that, it leads to war. Right. So those are the reasons that it's important to be more aware today. You don't get this information at school, but you do get it on YouTube and things like this and talking to private entrepreneurs like Tom. So it's up to you to seek the information you want, because if you go to a school teacher, they're going to tell you, go to school and get a job, work hard, save money, and put it in the stock market, which is suicide, absolute suicide. So again, America's founded as a tax-free nation. There's a couple other things that Marx said is that workers of the world unite, and then they all become union guys. And nothing wrong with that, but my rich dad just hated unions. He says all they want to do is get paid more and work less. So when my poor dad was head of the teachers union of Hawaii, I sat there at his teachers union meetings. I wanted to vomit. Because the labor teachers unions, and Trump is shutting down the, the education department. That's right. I think that's hysterical. But I'd sit and listen to my father talk to the union leaders of the teachers. I wanted to vomit. It had nothing to do with better education. That most of these school teachers who are union guys, they're Democrats. They just want to get paid more and work less, And it was just disgusting. I sat there going, why are we paying you guys? They get 3 months vacation a year anyway, or something like that. So anyway, you got to be careful who you listen to, because this is your greatest asset, is the space between this ear and that ear. And that's why I listen to Tom. Or if you like paying taxes and you think it's American, then join a labor union and go vote for Hillary next time, or Kamala, even better. My God, it's a free country. You vote for who you want to vote for, but I'm a capitalist and I don't vote for Marxist. Final words, Tom.
No, I think you said it right from the beginning. It's about incentives. And remember that the incentives are there for the big business owners, the inside investors, and a small business owner can act and behave like a big business owner. All you have to do is understand the rules. And that's why I wrote Tax-Free Wealth, was for the entrepreneurs to understand the rules.
Most important, do it legally, right?
Most important, legally, ethically, and morally, every time.
It's a lot cheaper to do it legally. It cuts down your attorney's fees.
It does, and it helps you sleep at night. Very important.
Yeah. And I have a good time figuring, oh, I made so much money. That means I have to give Kenny more money, or give Mike Maselli more money, my oil guys or my cattle guys. I'm always investing. but not in stocks, bonds, or mutual funds like Tony Robbins recommends, because I'm not that stupid,
That's right. The incentives work.
Yeah, but I'm an entrepreneur. I'd like to make a lot of money, support my government, and not pay much taxes. America was founded as a tax-free nation. Boston Tea Party, 1773. Thank you, Tom, very much.
Thanks, Robert.
Welcome back, Robert Kiyosaki, Rich Dad Radio Show. The final words of this. Thank you, Tom Wheelwright. Book is Tax-Free Wealth. His franchise is TFW, not DFW. Final words is this. There's a lot of people living in Puerto Rico. And the reason they go to Puerto Rico is to pay less taxes. Well, if you read this book here, nothing wrong with Puerto Rico, but you don't have to live there. So I mean, all these guys who are giving advice over YouTube, ask them where they live. It's in Puerto Rico because they didn't read this book here. Look, remember, America was founded as a tax-free nation, and you're a Marxist and a communist if you're paying taxes and joining a labor union. So don't drink the Kool-Aid of go to school, get a job, or become a doctor or a lawyer. Follow the Rich Dad properties here. This is who we talk to, B's and I's. And you can stay up here if you want. With Tom's book, you can come down here. So thank you, Tom Wheelwright, Tax-Free Wealth, and thank you for listening to the Rich Dad Show.
This podcast is a presentation of Rich Dad Media Network.